So in this video, I'm going to be explaining how you can do a proper top-down analysis, starting from the weekly time frame all the way down to the 15 minutes time frame, where you get to wait for your shift of structure and then take your entry from the 1 hour or the 4 hour signals that will be presented. So first of all, before we start our top-down analysis, there's a specific concept I will need you to understand, and that concept is the concept of time frame correlation. Now, if you don't know or understand time frame correlation, I will be making a dedicated video on that later. But for now, I want you to understand that time frame correlation simply refers to how each of these time frames move with each other. You get the way they, align and complement one another. You get so there are times when you come to the weekly time frame and you are seeing a very very clean bearish trend. Get and there are times where you go to the 4 hour time frame and you are seeing a consolidating market. Meanwhile, the daily is trending. You get so the reason for that is simply because of time frame correlation. You get the different time frame interacting with their various zones and various areas of interest. You get so let me just quickly do a brief explanation on that. So over here now we have this market. We just have something like this. The higher, this is lower high, lower low. Then price came here and broke this high. We tested the key level here. I have a video out on how you can find valuable key levels, some tips you can use to find these the best key levels. So you can check out that video. Link is in the description. So, anyways, we have this printing another higher high, which is higher than this high. You get so this is the structure we have on the weekly. So I'll bring this out and just drop this here. We'll drop down to the daily now. Sorry, before I go to the daily, let me mark out where I started price action. So I started from here, I believe. So there I started from. So we could drop down to the daily. And on the daily, this is where I started from. So we have this price action. This high, lower low, lower high, lower low, lower high, lower low, higher low. At this point, this structure has shifted bullish yet, but it ended up doing the same thing. It broke and made a lower low instead. So this time it started printing higher highs. Okay, so it switched from a bearish structure to a bullish structure, now printing higher highs and higher lows. Okay, so we have structure like this. What I'm doing now is simply marking out the structure so that you can see what goes on when each of the time frames are doing their own different kind of price action. So this is what we have on daily. I think I'll change the color. Let's say the daily, let's make the daily blue. So we have this price action on the daily, and then we drop down to the 4 hour. And in the 4 hour, you're seeing a whole lot of price action going on. So if I'm to draw this all out, it's going to be very very confusing. So and it's going to be having a lot of lines. So I'm going to just map out this area here. So this is our higher highs and lows. Came up, broke the structure here. We tested the key level, and what continued back down. So what we are seeing here now is simply price reacting to various areas of interest on different time frames. You get, and on each of these time frames, we have different kind of traders taking actions on different zones in the market. You get, so this is the structure we have. I'm going to make this red. So this is the 4-hour time frame. Sorry. So if I have to put this into this price action, I believe it should be the area. Let's move this. If I'm to put this into this price action, I believe this should be this zone. This should be the area. Yeah. So if you observe, you see that as we go lower on the time frames, let me turn this off. Try to stop distracting. So as we go lower on each of these time frames, you notice that there's a whole lot of structure going on lower and lower you go on time frame. So this is the same area of interest. Again, this is the same zone. But then what happens is that let's hide this for now. 64-hour. Let's hide this for now. So the black line here is the weekly, and you can see on this black line we have a single touch to the zone. You get, so, and we understand that in one weekly candle contains 5 daily candles. You get, so for one candle to touch this, and definitely it will not be only a single week, it will be like 3 candles, which means we are going to be having 15 candles operating within this area. You get, so now on the daily we are having more price action going on. Yeah, we have the higher highs and we have the 3 triple bottom going on that zone. Yeah, this is what we mean by price is fractal. Yeah, so we are having this structure, yeah, single touch and then the reversal, the continuation to the bullish trend. You get, but over here you are seeing multiple highs and lows being printed on the lower time frame. You get, and then we are seeing price breaking structures. So we have higher highs. This high broke this high, and then we have price coming back down to break this low. Yeah, so at this point price is now bearish. Yeah, so then what now happens is that price gets to the weekly zone, and since it's the weekly zone, we are actually going to be waiting for candle reactions. We're waiting for the candles to close. That's for us swing traders. While we swing traders are waiting for the candles to close, we have scalpers and day traders that are already taking action within this zone, and then causing all these price actions to happen. You get, now the combination of each of these little price actions gives us our candlestick formations on the higher time frame. You get, so it's the same thing going on for the 4-hour. So I'm going to turn this blue off now. Let's just turn that off, and then we have the 4 hours printing that's a quicker price action. You get, we have spikes all over the place. You get, so we have triple bottom also, but then within the triple bottom we also still have highs and lows being printed and broken. You get, so this is what we mean by time frame correlation. Now, understanding the price movements, let's now apply it to the chart. Let's actually use this, because I believe if I should use it, you understand what I'm explaining even better. Get, so over here we have price. Let me delete this. So over here we have price at this level. You get price just broke this. Let's move back a little bit. This was our high, and this was our low. You get, so at this point, let's act like all these price actions have not taken place. You get, and at this point, we have price in a downtrend. So our anticipation was for price to get to this key level and then continue the downtrend. You get, so this is what we anticipated. Price pulls back, taps into the key level, and then continues the move. You get, but then price didn't do that. What did the market do instead? The market now came up higher and then broke this high. It did not only break the high, but it ended up body closing above high. So at this point, price has now switched bullish. This becomes our higher high. So our anticipation is now different. What we now expect is that price will come down either to retest this key level and continue the move, or to come down into any other area of interest between this high and this low. You get, and as you can see, it ended up at the second key level and continued the move. Now, what we're going to do is that I'm going to map out that key level. Let's delete all of this. Let's delete all of this. So we have price coming back down to this level. You get, so if you check this level, this is the last area before price should invalidate the uptrend that it just printed. Okay, so if price comes below this low and close, you know that it has invalidated the uptrend that was printed. So that is why it is the last level. And if you watch this, you see that this area actually aligns with a major key level. That makes it a stronger zone, very, very visible on the chart. So since this is a clear key level, we are now watching for this area. We're now watching for this this key level, and what you can see here is that price printed 3 candles. You get 3 candles. You get, and within these 3 candles, we actually now have 15 candles being printed. That is, if we are going to drop down to the daily, you get, because one of these candles contains what, 5 candles each. You get, so you are seeing a very clean structure. Yeah, very clean structure, simple retest. You get, but then if we are to now drop down to the weekly, you see that, to the daily, you see that for that simple pullback to occur, for this simple one leg pullback, this pullback you are seeing, there was actually a trend that was printed. Get, so this is it on the daily. You see that it printed an entire trend just to make that pullback. This is the trend that was printed. Okay, so on the weekly it's a clean leg, but on the daily it's a full trend. I don't know if you understand. So on the weekly it's a clean leg. This is the move here. It's a clean leg, but on the daily is an entire trend that was printed. Get, that's what we mean by time frame correlation. These time frames are moving with each other. So if you understand this, you will know that the way they move determines when your trade is ready to continue its momentum to the projected direction. Okay, so the weekly now, what are we expecting? We're expecting price to tap into this zone and continue the move, right? But then we don't really know when this move will continue, when it will start. You get, so this is where the understanding of time frame correlation will help you a lot. So if we are to drop down to the 4-hour, this is where everything begins to play out. You get, so let's observe the 4-hour. You see that the 4 hours was obviously in a bearish trend. You get, printing higher highs and higher lows. Yeah, but then what happened here? Price broke the high here. You get it broke the high here and then came back for the retest. So the fact that the 4 hour time frame has switched bullish and now aligns with the weekly that was already bullish, it means that alright, this pair is probably ready to begin its move. Okay. Let's say you did not know that you didn't have the knowledge of time frame correlation. Over here, this was actually an entry signal, quite strong for that matter. But then you see what happens is that you end up staying in this trade for a very, very long time. Not just that, for a simple 1 to 3, you will be staying in this trade for the next, at least let's extend this. Let's see when the TP actually got hit. So you'll be staying in this trade for the next, say, 26 days. That's basically a month. You get, which is not something we want. You get, like, I get the fact that patience is key, but it can still mess up your mind when you are holding this trade for so long, because you will be paying swaps, you get, for holding your position overnight. You get, so it's better you know when your trade is actually ready to move. You get, so when you know your trade is ready to move, that is when you start anticipating an entry signal. You get, so to do your top down analysis, what you do first is identify the trend. You get, so at this point the trend on the weekly was bullish. You get, so it was bullish because why? It broke this high. So you can see in the price what we have here. This is the previous confluence I wrote out, so let's just clean that. At the time I was looking at this, the daily was actually bearish. It was bearish, and the 4 hour, sorry, the 4 hour was also bearish. You get, so that was at the point of me looking at this. The weekly was the only thing that was bullish, meaning it's making this pullback. You get, now you get to the daily. You get to the daily. You can see the daily is printing lower highs and lower lows. That's it. We are done on the daily. So get to the 4 hour. The 4 hour the same. Printed highs and lows until this happened. Until this happened. You get, so if you watch here, you see that yes, price came down here, started printing highs and lows, but there was no high that was broken. Yeah, this was a one leg move. You get, so it came back down, broke the low here, and this was the last elbow before this break. You get, so after that high was formed and it was taken out, it was that the candle body closed above the high. Yeah. So it came back down for the test. It's as simple as that. So at this point in time, you can now go to your confluence, that your trend identification for the 4 hour has switched from bearish to now bullish. So over here now, you now have two time frames in sync. You get, so the next confluence we are going to be typing up, since the two time frames are now in sync, is that price is retesting the area of interest. You get, that's the other confluence. Then our third confluence is that we have the shift of structure. For hours, you get, so it's as simple as that. And then on these 4 hours after the shift of structure, we still have to wait for price to come back down to a level that we trust. You get, because this shift of structure can happen higher. You get, but then we still have to wait for price to come down to an area that we can trust. So if I'm to circle this, our entry time frame is usually the 1 hour, so that we can get a good risk to reward. Get, so if I'm to circle that, you can see that time frame correlation, remember what I stated about time frame correlation. So you expect that the 1 hour will go bullish first before the 4 hours, before the daily, before the weekly, which was already originally bullish. So this was when our 1 hour went bullish. Get, but then this was where our 4 hours went bullish. So you can see that the 1 hour happened before the 4 hours. Yeah. But then over here now is where you start looking for entry signals. Because what price is now at the area of interest, and then we have the shift of structure confirming the change in trend. Yes. So we put our risk to reward to, because this is where we'll be getting a stop loss. Normally the stop loss should be below where the shift of structure happened. Get, this is where the stop loss should be. But then I usually advise to give it a breathing room. Give it a breathing room of at least 10 pips. So we are going to be having a stop loss of 41 pips. You get, so expand this and then target your weekly high. Since the area of interest was found on the weekly, it means that your target should also be drawn on the weekly. So we have our target here, and we have a risk to reward of 1:4, targeting 168 pips. You get, so that's how quick and easy you can do a proper top-down analysis using the concept of time frame correlation. So this time frame correlation, if you actually want to understand it in depth, I'll be creating a dedicated video on time frame correlation only. And in that video, I'll explain in depth how each of these time frames really move with each other. You get, how it is that whenever on the weekly we're having, say, an indecision candle, just like this one. You get, let me do this. We have an indecision candle like this over here. It's forming, and as that is forming, we end up having, let me mark it out. We end up having a full consolidation in that area. So if I'm to mark this out, is that this whole zone here was not a clean trend, it was a consolidating market. You get. So why is it that happens? To understand that, I will be dropping a full video dedicated on explaining that time frame correlation. So if you're interested in seeing that video, do it to subscribe. So that will be it for this video.